Good day, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗴𝗀𝗲. Today is Friday. It is August 27th, and boy, oh boy, where did this week go? It's actually not officially the last week of August. We actually have the end of August, beginning of last week, but boy, oh boy, this is like large hedge funds are out of town. Most hedge fund investors and traders are on vacation. There's not a lot of liquidity coming into the market. Meanwhile, we've got a lot of reports and a lot of data. When you combine data and illiquidity, you get a lot of volatility. So be prepared for volatility to go a little higher over the next few days, especially with this data that we've got. Now, GDP yesterday came out solid. Jobless claims came out solid. Today, we've got Jerome, Mr. I'm going to predict the future 2 years in advance, Powell speaking. We've got consumer sentiment, which is kind of dumb to have consumer sentiment the day after GDP, since consumer sentiment reflects 2/3 on the GDP. But what do I know? I've only been doing this for almost 28 years. We've got personal income today, aside from Mr. Jerome Powell speaking. And as far as the numbers are concerned, we are looking at a 0.3% rise. That's the expectation. But as you can see here, the consensus is all the way from -1.5 to 0.6, so we could be a little all over the place. The bottom line is anything positive, I'm going to take. Personal consumption, 0.5% higher. So 0.3 on personal income and personal consumption, 0.5. And we're going to be getting that data in about 34 minutes or so, and the market's going to be opening up in about 90 minutes. So there's a lot of data on the table. In light of that data on the table, keep your eye on the bond market. The bond market started moving lower yesterday, as we predicted, anticipated, and told everybody watching these videos about a month and a half in advance that I think the bond market's going to go down. The only reason it rallied yesterday towards the end of the day was because of the attack. Afghanistan. Afghanistan is a huge, huge, huge issue, or it could become a huge issue. Now, when you hear Jerome Powell speaking today, I want you to pay close attention to how often he brings up COVID and Afghanistan. If he starts bringing in COVID and Afghanistan, then he's going to start using those two factors as an excuse for why he shouldn't decrease the bond purchases, the monthly bond purchases, the $120 billion worth of monthly bond purchases. Holy moly. If he starts talking about economies looking really great and things are looking good, and if he doesn't mention COVID or Afghanistan too often, then there's a good chance he may slow things down. If he slows things down, bond markets go down. If he doesn't slow things down, I don't think there's a lot of upside left. I think we may just kind of hover around this area. But in my opinion, we're going to break this 200-day moving average and go down because interest rates are going to go up, and there's a complete 180-degree relationship between interest rates and the bond market. In other words, interest rates go higher, bonds go lower. It's just that simple. And I'm not really seeing a major catalyst aside for a crash in the stock market or another major war or something really nasty happening that would cause the bond market to go higher, which means the U.S. is in deeper doo-doo than we expected. Let's talk about global economy. And we already kind of mentioned the big parts today. Markets are awaiting comments from Mr. I'm going to predict the future a few years in advance. He's horrible at that. I'd love to play poker with this guy, who speaks at Central Bank's symposium in Wyoming. Wyoming must be beautiful right now. The weather must be nice. Any indication of when the bank will start scaling back on asset purchases will be closely watched. They are spending $120 billion a month on asset purchases. Don't ask. Don't ask. So any signs of concerns about the COVID Delta variant or the Afghanistan could caution towards tapering. This is what maybe I shouldn't read these. I should just tell you in my mind. But we're saying the same thing. It's good to have a little bit of a different perspective on an analysis, especially if I'm saying the same thing as this analyst. Several Fed officials have suggested that easing will take place sooner than later, although a firm timeline has not been set, which is kind of what we're waiting for. Also, concerns that a deadly attack in Kabul in Afghanistan, that's bad. And that could really, remember, nothing impacts global economy more than global events. A lot more than corporate news, stuff that happens in America. The biggest thing that can happen to U.S. stock market is global events, because global events drive U.S. stocks. It's like this: global currencies, bonds, and then stocks. Stocks are the third factor to absorb data. currencies, bonds, and stocks. For those of you who don't know this, currencies are about 1,000 times bigger. The currency market, global currency market, it's about 1,000 times bigger than the stock market, and the bond market's about 400 times bigger than the stock market. So the stock market's actually very small when you compare all the other stuff above and beyond it that's causing it to move. U.S. President Biden, oh, don't get me started on Biden, said the bloodshed would not drive U.S. out of Afghanistan earlier than scheduled. I don't even know what to say on that. And that he has instructed U.S. military to develop a plan to strike Islamic State military group. A plan. Folks, the generals have been trying to shove a plan up his you-know-what for 2 weeks now, 3 weeks, telling him that exactly what was going to happen yesterday happened. So I don't know what he's waiting to develop. I think the military has a pretty good plan. I don't think a military needs to come up with a plan. I think 20 generals already gave him plans. Don't get me started on this, but I think yesterday could have been prevented or avoided. So I'm not really happy about that. But again, I don't want to get political. I just think that there's plenty of plans already around. I think America can resolve this problem in less than 5 hours if they wanted to. And I think there's plenty of plans already on the table. I think Biden just has to go with one. Don't get me started with him. Again, bond market, I'm expecting choppiness or potential downside if Biden starts talking, if Powell starts talking about a slowdown. Markets, overall markets, choppiness, sideways choppiness. Look at the equal weighted SPY. I mean, talk about nothing to write home about. Looks like it's going to come right back down. And if I look at all individual sectors, which I'll show you right now, they're not looking all that great, actually. Look at this. Nothing's looking that good. Financial looks like it topped out. Looks like it's going to come down a little bit. Energy looks like it's going to do another leg down. I'm surprised. Consumer staples looks choppy. Industrial looks choppy. Healthcare looks like it peaked out a little bit here. Technology looks like it's going to come down. Utilities looks choppy. Materials looks choppy. Real estate's the only one that looks like it has potential to really go up. Communication doesn't look good. Consumer discretion looks awful. So I'm not really bullish, but there are still stocks that are doing very, very well right now. By the way, look at the put to call ratio. It goes from being grossly oversold to overbought in 1 day. That's a choppy market. And right now it's just random. So I wouldn't put a lot of faith into this market. The thing you want to do is you want to trade stocks that are consolidating, not over, and that are sharply outperforming the market. So I'm going to give you some of my favorite stocks right now. And this stock, C Limited, we picked the stock here when it was at 75, when it was at 98, when it was at 181, when it was at 184, when it was at 183, and now it's at 321. And I'm loving it even more. I think it's going to have a nice breakout. It's been consolidating. It's been bucking the trend. Next one, AON. Again, consolidating, bucking the trend. The stock has been doing really good, all-time highs. And again, notice not a lot of trading action, ascending triangle, higher, but a lot less volatility. AON. Next one, Life Storage. What did I tell you guys about storage companies? Remember a few months ago? Self-storage, 78%. That's where the money is right now. A lot of people are moving stuff into self-storage. Look at this trend. Look at this trend. Is that a trend or what? I mean, that's just amazing. I love this trend and I love this stock. Next one, Essential Property Real Estate Trust. They purchase small commercial spaces. Like here, let me show you what I'm talking about. Convenience stores, entertainment, early childhood education, healthcare, fitness sectors, but very small single tenant properties. And it's less than a $4 billion company. And they've been doing, look at this. They've been just going up straight. Love this stock. Next one, there's a pullback on Procter & Gamble. Now, we could go down to the 50-day line, but I want you guys to start watching it now. It's one of my favorite stocks, and it tends to be a consumer staple stocks, which is defensive, but I do think we're going to go down a little bit more. And lastly, I also have a short for you. So I've got 1, 2, 3, 4 congestion breakouts, a pullback, and a short. Look at this TPI composite. I mean, look at this thing. Made a high all the way in February, lower highs. The 200 is above the 50-day, classic signs, pulling back to the 50-day line, and it looks like it's going to go from 41 all the way to 35. So we've got 1, 2, 3, 4 bullish pick, 5 bullish pick, and 1 bearish pick for Friday. And folks, I've got something important, timely, and something I really urge you to pay attention to. There's a massive discovery that can help everyday traders just like you grab triple-digit windfalls from the markets from a simple, easy 0.01 rating formula. And Wall Street expert and 10-time heavyweight trading champion Chuck Hughes, he's been able to use this formula to signal a recent 96.2% win rate on over 100 positions, 104 out of 108 to be precise with you. That's a number. That's a number. I don't know how to do that. Now, the stock market has been filled with market-moving catalysts lately. Afghanistan, COVID, don't even get me started. And it's gotten harder to pick winners, especially with this congestion, the consolidations we were seeing, markets going from overbought to oversold, no clear trend in the stock market. Definitely, it's been getting harder because of the time of year. Now, imagine having a strategy like this to help you navigate all of the data on Wall Street with a 96.2% win rate. For the first time ever, Chuck is sharing it with the world. He's pulling back the curtain. There's no stopping him now. Click on the link below to learn more about the 0.01 rating and Chuck's 𝗧𝗴𝗀 strategy, and do it now. Folks, it's Friday. Spend the weekend learning more about what Chuck spent over 35 years developing. This is really good stuff. Follow the link below and learn about his 0.01 rating and Chuck's 𝗧𝗴𝗀 strategy. Do it now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post my next video for you. And you know the most important thing I have for you? I got some really good advice. Have a great weekend. Forget about the market. Watch Chuck. And don't forget about 1, 2, 3, 4, 5 long stocks and 1 bearish stock for Friday. Bye, guys. Have a great weekend.